Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index eased to 101.4 on Tuesday after testing a 15-month high of 101.6. Softer energy prices reduced expectations of further Federal Reserve tightening as diplomatic efforts surrounding the US-Iran conflict helped fuel prices retreat from recent highs. However, inflation risks remain elevated, and rate markets continue to price in the possibility of another Fed hike this year. WTI crude fell below $79 per barrel on Tuesday, reaching its lowest level in more than a week. Renewed diplomatic efforts to secure the Strait of Hormuz improved the outlook for Middle Eastern oil supplies. However, regional risks remain elevated following drone attacks on Saudi oil facilities and threats of further military action if negotiations between Washington and Tehran fail. Gold fell to around $4,025 per ounce on Tuesday, reversing the previous session's gains as markets continued to assess the possibility of a Federal Reserve rate hike this week. Although lower oil prices eased some inflation concerns, gold remained under pressure. Ongoing uncertainty surrounding US-Iran negotiations continues to support safe haven demand, limiting the downside for bullion. The Japanese yen traded near 163.85 against the US dollar on Tuesday, remaining close to its weakest level in 4 decades. The dollar stayed firm as markets considered the possibility of a Federal Reserve rate hike. Meanwhile, the Bank of Japan is expected to keep rates unchanged, while uncertainty over the timing of further policy tightening continues to weigh on the yen. Euro traded near 1.139, recovering slightly but remaining within the medium-term downtrend that began in April. Federal Reserve policy uncertainty, elevated energy prices, and widening yield differentials continue to drive the pair. Higher energy import costs remain a headwind for the euro, although a more restrictive European Central Bank stance could provide some support through higher short-term interest rates.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.